Hello and welcome to the trades and tutorials video from the Little Big View section of MarketGauge.com. This is Jeff Bish, president of MarketGauge. And before I get started, if you are new to this video and you're not already a member of the YouTube channel by Market Gauge and you're watching it on YouTube, please make sure to subscribe. And if you're looking at this on our site or even on YouTube, I should let you know that there's a setting down in the lower right-hand corner that enables you to set this to HD, high definition, which is typically not the default. If you do that and then stop and start the video again, you'll see that the video will be a lot clearer. So give that a try, high definition, lower right hand corner. So today I'm going to talk about crude oil and ways that you could take advantage of the collapse in crude oil, and maybe now is the time to start looking at some longer term opportunities to get long, but not necessarily crude oil itself. Now right now we're looking at the ETF for crude oil USO. And I want to point out a pattern. And one of the reasons that I'm focusing on this right now is because something has changed. And long term, short term, it's always good to look at the markets to see if a pattern that has been prevalent has now shifted. So the pattern that has most obviously changed in terms of crude is we're looking at a weekly chart. So ever since the high of this move, we have not but once had a situation where the week has closed higher than the high of the prior week. So this is the last time that happened, and I want to point out that when that happened, it was a rather weak day, or week, and the following week did not follow through. So to get the two things together, a close above the prior week, and then to break that week, has not happened this entire time. Now, we clearly have closed above the prior week here in the for the first time. Now, we have not continued to move higher, but that's why we want to keep an eye on it. And also, this has been the most significant move above the prior week that we've seen through this whole decline. So with that, you really want to sit up and take notice. But as I said, that doesn't necessarily mean you want to trade or buy the commodity itself. So let's take a look at what I mean. So rather than buy USO or look to buy USO, I'm going to be looking to take advantage of moves in related ETFs. So let's take a look. First of all, I'm going to take a look at OIH, just the ETF that's probably most closely related to crude oil in terms of companies that that deal with oil. So what I've done here is we're now looking at the weekly charts of OIH on the top and USO on the bottom. But I'm not going to look at the weeklies right now. I want to look first at the daily. Because the other thing that has changed is as this market has declined on a daily basis, every single time that the crude oil has made a new significant low, the accompanying ETF, with the exception of in here where it just held, also made a new low. Now, what's changed this time that was different here is this line, and I'll explain that in a second, and this line. So this is the 50-day moving average, and the green line is the 10-day moving average. So while USO, and the last time that I would have pointed something like this out would have been back in the October, November of 2014, where OIH was managing to hold up, couldn't get going over the 50, couldn't make a new swing high, but it looked like it was trying to hold, but eventually just the weight of crude pulled it down once again. And then in that subsequent decline, the pattern continued, which the pattern being that when USO made a new low, even if it held and the ETF bounced, when it made a new low again, the OIHs in this case make a new low, not quite as badly, and then USO makes a new low again, and look what happens. OIHs did not make a new low, so we've got a divergence. Okay, but on top of the divergence, we now have a situation where one, we have a divergence, and two, we've broken above the swing high. Okay, now that's something that we have not seen in this particular ETF through this whole decline. So this is showing you that you've got some better relative strength relative to the underlying commodity, and that strength is actually strong enough to make a new swing high. Now, what should also get your attention is the fact that we're now consolidating around the 50-day moving average. Now, the 50-day moving average slope is still extremely negative. So if I had to make a bet or a guess, it would be that any breakout that occurs here will retrace relatively quickly back to the 50. When I say relatively quickly, we're looking at a daily chart. Probably within a few weeks, you'll have a good retracement trade if you get a good breakout to it. So first thing, as a quick review, the momentum on the downside slowed and then reversed relative to the new lows that were being made by crude oil itself. But this is OIH. OIH is one to watch, but it is not the strongest one of the group in which I'm going to show you. So the other ones I would pay attention to are XLE. Now XLE is going to have a higher component of natural gas to it, so it's probably natural to expect that this would hold up better relative to crude. But if you look at the entire energy complex and take the position that crude has gotten absolutely smashed, and there is probably going to be a longer term opportunity here for bottoms forming. It looks like we're seeing bottoms form in these particular ETFs, OIHs, XLEs, and I'll get to XOPs in a second. Now, XLEs I think look even better than OIHs because they held this low in February even better, January, even better than OIH, and then again held this low. So this has a much better looking relative strength bottom, and it's got a much stronger swing to the upside where it's actually over the 50. So this is already in the situation of having moved over the 50, and a retracement back here to this is now the 10 and into this area. This is an area I would play for looking to find low risk entries on the long side. Crude oil has been so volatile, it would be hard to not to expect that it will make another push lower. I don't know that it makes a new low, doesn't really matter, but on weakness, the big picture here is on weakness, you want to take a look at XLE and see if it can hold that 10-day moving average, see if it can hold the 50-day moving average. That kind of a retracement is a low risk entry for a situation that even if this thing just rallies back up to the 200 or these major levels here, you've got a really good trade that should give you a 5, maybe even 10 to 1 risk reward setup. Now finally, you've got the XOP. This is the oil and gas drillers, and this one looks, I think, the strongest of all of them, primarily because, one, it didn't really make a low here, it made a much higher low than the other ones here, and it's also taken out its swing that dates all the way back to the end of 2014. And on a relative basis, it's slightly more over the 50. So I would focus on OIH, XLE, and XOP, all of them, and look for these relative patterns of new swing highs, pullbacks. So the pullbacks and the big picture here is that USO is probably going to have trouble moving above the 50. Whether it does or doesn't, it is most likely going to at some point pull back nicely. When it pulls back, look for the opportunity in XOP, in XLE, in OIH, and probably in that order. One of the things I'll point out just in conclusion is you'll notice that when stocks really get trending, and XOP has demonstrated this nicely on the turn, they tend to stay over the 10-day moving average. So here's an example of trending down, stayed under that 10-day moving average. So it's these pullbacks to the 10-day moving average in a trending environment that are really powerful. The setup here is a retracement in crude, pulls XOP now back down to the 10. You look for a low risk entry there, and you have the opportunity that it turns around and continues to meet 200, and that's a huge trade. Hope that helps, and I'll see you in the next video.